Hey guys, it's Ryan G. Wright with DoHardMoney.com coming to you with a Just Ask Ryan question of the day. And today's question is how do I buy a property with delinquent taxes? We're going to talk about this and all about the delinquent taxes and how to handle this situation if you're looking to acquire a property. And we're going to get over here to the whiteboard to show you a few things. But before I do, I want to talk about if you've got a question you'd like to have me answer, all you've got to do is type it in the comments below. If you type that question in the comments below, I'll create a video just like this to answer that question for you and for everybody else on YouTube that is interested in that answer. So I'd love to see those comments. But let's talk about this. What are delinquent taxes? Okay, what we're talking about here is delinquent property taxes. And so the seller, let's say the seller is selling the property to you for $100,000. Let's just make it really simple here just for some of our math. Whoops, I've got the camera going crazy. So let's just say the seller is selling a property for $100,000, okay? But let's say the seller's property taxes are $2,500 a year, okay? And let's say the seller, in this example, hasn't paid the property taxes in 2 years, so then it's $5,000. And then there's some fees and that type of stuff they're probably getting. So let's say there's another $1,000 or whatever in fees. So let's say it's $6,000, okay? So basically the seller also owes $6,000, but they're selling the property to you for $100,000. Well, this is how it's basically going to work. Let's assume in this example that the seller owes $50,000. My marker's gonna die on me here. Let's say the seller owes $50,000 to the bank. Okay, so if the seller did not owe the taxes that we've got over here, then basically when they sold the property, they would get the $100,000 from you minus what they owed the bank of $50,000. So they would get approximately $50,000 minus the title fees, you know, a couple $1,000, and they'd probably get somewhere to $49,000 that would go into their pocket at the closing. Okay, but if you're buying the property and the seller has this $6,000 of delinquent taxes, what's going to happen is if you're closing it at the title company and you've used a good purchase contract that says the seller's responsible for those things, which they should be, then what's going to happen is they are going to, boy, do I need to get a mark here? What's going to happen is the $100,000 is then going to have the $6,000 taken out for taxes plus the $50,000 taken out for the bank loan, the loan that they had to Bank of America, Chase, whoever it is. And then there's about $1,000 in this transaction of title costs for the seller, and then they're gonna net that. So what do we got? $57,000, 1,000 plus 6, $57,000. So then the seller is gonna walk away with $43,000 in their pocket is what they're going to get. So I get a lot of people that are worried about, oh no, the taxes aren't paid, what's going to happen, all that type of stuff. Well, if you close with a title company, the title company is responsible for making sure the taxes are current, to make sure when you get the property it's free and clear, that the loan has been paid, that any encumbrances against the property have been paid, and as long as your agreement, which our agreements do and most standard real estate purchase contracts do for the state, is going to say, hey, your seller's responsible for these things. Now, occasionally what will happen is some investors, more sophisticated investors, will tell people, we'll pay this for you, we'll pay all this for you. Now, if that's the case, basically what's happening here is they're basically increasing their offer from $100,000 to $106,000. Right? So they're basically saying, hey, I'll pay you $106,000 because they're going to pay more, and then $6,000 will get paid in taxes, $50,000 will get paid to the bank, $1,000 in title work, you know, will basically get paid. But in this scenario, basically what's happening is the seller's going to net $46,000, which is the same here type of a situation. So they're doing that, but the difference is the buyer is then paying $6,000 more for the property. And the reason that they're doing that is to try and make it seem like less hassle, where it's like, hey, we'll take care of those taxes. You don't worry about that. As long as they know what the taxes are, they're just building that into the deal, but then they're paying more for the property. I like to just say, let's get those prices and we'll break it down and know exactly what you're going to be netting here. But at the end of the day, with delinquent property taxes, as long as you're using the standard purchase contract, and this purchase contract states that the seller's responsible for any liens or encumbrances that they have on the property, and they're going to have to give you clear title to the property. And as long as you're using a title company, this is the scenario that's going to happen. The loan's going to get paid, and then the taxes are going to get paid, and the seller's going to get what's left. Now, here's where you run into a problem. Let's say that the seller, instead of owing $50,000, owes $100,000. Okay, this is where we run into a scenario. If you're buying the property for $100,000 and they owe $6,000 in taxes, and they owe the bank $100,000, and they're going to have $1,000 in title fees, right? You're basically going to be upside down by $7,000, which means the seller will be responsible for bringing $7,000 to the closing table in order to sell this property. Some sellers are able to do that. Other sellers may not be able to do that. So the only way this transaction can happen is either the buyer raises their price to $107,000, or the seller brings $7,000 cash to close. That's the only way, because you have to be able to pay these liens off. Another option, potential option, would be to do a short sale and get the bank to take less than the $100,000. But a bank's only going to do that if the person's behind on payments, if the property's not worth, that $100,000. They're going to want to do run an analysis on that. I've never seen the taxes get reduced, but that's something you could potentially try. So one of three things has to happen: is you've got to pay more as the buyer, you've got to get somebody to come down on what's owed to them, or you've got to get the seller to come up with the additional funds in order to close on the transaction. So that's what you're looking at for delinquent taxes. I wouldn't overly worry about this. I think the best thing you can do is make your offers, use the standard REPSIs, or make sure you have a contract that says the seller's responsible for that. Get it all over to title, make sure you're using title insurance, and then when these situations come up, you can work with them. But people overly worry about this, because if it does come up, then the seller's just going to get a little less money. But the seller should know that, because they should have gotten lots of notices on their taxes saying, you're behind, this is a problem. They should have gotten those types of things, and they should be aware of that. You're not going to know about this until a title report is actually done. Now, one of the things you can look at is finding properties that are behind on taxes. One of the things that they typically do is what's called a tax sale. Depending upon where in the country you are, there's tax sales. And so what happens is this extra $1,000 that in fees and that type of stuff is actually paid to an investor. So an investor can come in on this $2,500, and that can be purchased by an investor that puts up the $2,500, and then the next year he puts up another $2,500, and then when this gets paid off, they actually get the interest, or they get the return on that money. It depends on the state. Every state handles this a little bit differently, but that's called investing in tax liens. That's something that you could check out as well. So what you're going to want to be doing is not be overly concerned about the delinquent taxes, but you want to be aware of them so that you can check with your title company and make sure that you are covered. If you have enjoyed this video, please hit that thumbs up button. What it does is it tells YouTube to show this content to more people. What you may not know is YouTube doesn't show this video to everybody. They show it to some people. And if those people like it, then they allow more people to see it and more people to see it. You can go searching for it, but they're not going to show it up as a suggested. And that makes a big help if you hit that thumbs up button, because I do this content for you and I do it absolutely for free. A couple of things. I've got a video as what are the risks of buying tax liens. I talked a little bit about the tax lien situation here. I'm going to put a video on the screen so you can check that out, which is the risks of buying tax liens. In addition to that, I've got a blog post you're going to want to check out. It's the 16 ways to get 100% financing for fix and flips. And I'm going to link that into the show notes in the comments below, so you can click on that and read up on the 16 ways to get 100% financing. Now, if you'd like to get a copy of a purchase contract that'll make sure the seller's responsible for paying those tax liens, all you've got to do is text your email address over to this number, 435-294-0433. Again, 435-294-0433. All you've got to do is text your email address, and then you'll get emailed over a copy of a purchase contract that's going to help handle these types of things as well for you. Now, if you want some additional help, check us out over at dohardmoney.com. At dohardmoney.com, we provide the money, but we also provide tools, resources, software, assistance, project management, construction, help and advice on those things, all kinds of stuff. So if you're interested in getting started, or you're interested in growing in real estate investing on any aspect, check us out at Do Hard Money, because we'd love to chat with you and see if we might be a good fit for each other. Otherwise, make it a very profitable day, and bye for now.